Hi, this is Mike Barrios of Integrity Home Finance. Today I'm going to be talking about what the Secretary of HUD, Sean Donovan, mentioned at a meeting a few days ago, allowing the $8,000 first-time homebuyer tax credit to be allowed as a down payment. Now, just to let you know up front, um, yesterday there was a mortgagee letter. A mortgagee letter pretty much is an update, a news flash of guidelines or things changing with FHA. Now, there was a mortgagee letter that was published that mentioned these items that I'm going to be talking about. However, when I checked it this morning, it was pulled. It's not on the website anymore. Then what I did, I called HUD, I called FHA, spoke to a customer service rep. She mentioned that it was pulled because there's a couple details that need to be figured out before they make it public. And it was published before it was supposed to be published, so it sounds like next week around May 20th through the 22nd, around that time, the official guidelines will be released. But just for informational purposes, I'm putting this out so you can get your pipeline ready, so you can call your buyers, or so you buyers can get ready and know that you don't have to wait that long to save for a down payment. Now, let's go over the $8,000 tax credit. It's the lesser of the $8,000 or the 10% of the purchase price, and there's a phase out if a single person makes over $75,000 or a married couple filing jointly makes over $150,000. If a single person makes over $95,000, it's completely eliminated, and eliminated when a couple filing jointly makes over $170,000. Now, how it may work, it's pretty much a second mortgage, and it's going to be given by places that can offer tax credit advances with second liens, federal, state, and local government agencies, and nonprofit. FHA approved nonprofits can be found on this website, hud.gov/offices. And how the secondary financing will work. The tax credit advance, when combined with the FHA insured first mortgage, may not result in cash back to the borrower. The second lien may not exceed the total needed for the down payment and closing cost. The tax credit advance must provide that if the borrower does not repay the amount borrowed by the designated deadline, that principal and interest payments may begin automatically. And this is something that's also unclear right now. We're not sure exactly how long the client has to pay this back. So as news is developed, we'll let you know as soon as possible. If the payments on the tax credit advance are required, they must be included in qualifying the borrower. And when combined with the first mortgage, it cannot exceed the normal debt ratios. If the payments on the tax credit are deferred, the deferment must be for a minimum of 36 months in order for the lender not to count it in the debt ratio. The tax credit advance second mortgage must not provide for a balloon payment before 10 years. Now, how the short-term tax credit advance is going to work, the amount that may be borrowed in this manner may not exceed the anticipated tax credit due to the home buyer based on the computations from Form 5405. Fees and charges for the tax credit advance loan are not to exceed the nominal amount necessary for preparing and administering the loan. So there may be some fees involved in getting this $8,000 up front. Before this happens, though, there would need to be a couple changes. State agencies approved with money for the down payment, a change to the HUD guidelines on the time frame that is allowed for the loan, currently must be amortized for over 10 years with no balloon. A change to the IRS guidelines allowing your refund to be assigned to a state or nonprofit entity. So there's a couple of things that FHA guidelines need to change before this can take place. So as I mentioned, if you have any questions, please give me a call at my office at 909-945-8155, or feel free to email me at mbarrios@ihfinance.com. And as mentioned before, as news develops, I will prepare another video and let you know. Thank you very much.